What is the 2024 Bitcoin halving, and how will it affect the market? That's the question on everyone's lips as we approach the end of 2023. Let's start with the basics. Bitcoin halving is a process coded into the algorithm of Bitcoin, the world's first and most popular cryptocurrency. It's a kind of inbuilt financial policy that controls the supply of new Bitcoins entering the market. But how does it work? Well, imagine a gold mine where the amount of gold extracted is halved every 4 years. That's Bitcoin halving in a nutshell. It's an event that happens approximately every 4 years, or more precisely, every 210,000 blocks of transactions added to the Bitcoin blockchain. Bitcoin miners, the folks who process transactions and secure the network, receive a reward in Bitcoins for every block they add. This reward was initially 50 Bitcoins, but with each halving, this number halves. By the time we reach 2024, the reward will be just over 3 Bitcoins per block. But why does Bitcoin halving matter? It's all about supply and demand. By reducing the supply of new Bitcoins, halving puts upward pressure on the price, assuming demand remains constant. It's a way to combat inflation and preserve the value of Bitcoin, mimicking the deflationary nature of gold. Now, the upcoming Bitcoin halving in 2024 is particularly significant. Why, you ask? It's the first time we'll see a Bitcoin halving with the possibility of a Bitcoin spot exchange-traded fund, or ETF, in play. This could potentially open up Bitcoin to a whole new category of investors, further increasing demand. As we approach this pivotal event, it's important to understand the stages of a Bitcoin halving. These include the pre-halving period, the pre-halving rally, the pre-halving retrace, the post-halving resistance, and the post-halving parabola. Each of these stages has its own unique characteristics and impacts on the market. Now that we understand the basics, let's dive deeper into the 5 stages of a Bitcoin halving. First, we enter the pre-halving period. This is a pivotal stage in any Bitcoin halving cycle. It's a time when the whispers of the upcoming halving start to get louder and louder, stirring a sense of anticipation in the crypto community. Now let's break this down a bit. The pre-halving period is typically marked by a steady increase in Bitcoin's price. This is largely driven by speculation, as investors and traders alike anticipate a surge in the value of Bitcoin post-halving. It's a bit like the calm before the storm as market participants prepare for the roller coaster ride that is to come. But it's not just about speculation. The pre-halving period also tends to bring about a significant uptick in Bitcoin mining. Miners, after all, are eager to get their hands on as many Bitcoins as possible before the halving reduces the block reward. This increased mining activity can also contribute to price volatility, as the increased supply of Bitcoin might put downward pressure on the price. But here's the thing. The pre-halving period is also a time of great uncertainty. No one can predict with certainty what will happen to the price of Bitcoin once the halving occurs. Will it skyrocket as it has in past halving cycles? Or will it plunge, as some skeptics predict? This uncertainty can lead to wild price swings as investors grapple with the potential risks and rewards of holding Bitcoin through the halving. It's important to keep in mind that the pre-halving period is just one stage of the Bitcoin halving cycle. It sets the stage for the pre-halving rally, which we'll dive into in our next scene. But for now, let's just say that the pre-halving period is a time of anticipation, speculation, and yes, a bit of uncertainty. It's a time when the Bitcoin community braces itself for the halving event, eager to see what the future holds. As we conclude the pre-halving period, we move on to the pre-halving rally. Next, we experience the exciting pre-halving rally. This is a period that has historically been characterized by a significant surge in Bitcoin's price. It's like a roller coaster ride, full of ups and downs, but the general trend is upward. This rally is driven by a sense of anticipation and excitement, as investors and enthusiasts alike look forward to the upcoming halving event. You see, the halving is a rare event, occurring approximately every 4 years. It's a time when the number of new Bitcoins produced and earned by miners is cut in half. This reduction in supply, according to the principles of supply and demand, can lead to an increase in the price of Bitcoin. Now, it's important to remember that while the halving event is scheduled and predictable, the market's response is not. The pre-halving rally is a product of speculation and investor sentiment, and as we all know, these can be as volatile as the cryptocurrency market itself. Nevertheless, the pre-halving rally is a time of optimism. It's a time when Bitcoin believers are filled with hope and expectation. The halving represents a significant milestone in Bitcoin's journey, and the rally leading up to it is a celebration of sorts. It's a testament to Bitcoin's resilience, its potential, and its growing acceptance and adoption. But, as the saying goes, what goes up must come down. The surge in price during the pre-halving rally is often followed by a decline, a period known as the pre-halving retrace. This is a natural part of the market cycle, a time for the market to take a breather, to consolidate, and to prepare for the next stage of the journey. So, while the pre-halving rally can be a thrilling ride, it's also a time to be cautious. As with all things in the cryptocurrency world, it's important to do your own research, to understand the risks involved, and to never invest more than you can afford to lose. Once the rally simmers down, we face the pre-halving retrace. After the rally, we brace ourselves for the pre-halving retrace. This fascinating stage of the Bitcoin halving cycle is where we see a temporary yet significant drop in Bitcoin's price. So what exactly is the pre-halving retrace? Well, it's a period of correction that follows the pre-halving rally. You see, during the rally, Bitcoin's price tends to skyrocket, fueled by a surge of optimism and speculation about the upcoming halving event. This period is often characterized by euphoria and a sense of invincibility among investors. Everyone wants a piece of the action. But as with all things, what goes up must come down. The pre-halving retrace is when the market takes a breather. It's a time of pullback, where the price of Bitcoin retracts from its recent highs. In the world of technical analysis, this is seen as a healthy and necessary phase in a bull market. It allows the market to consolidate before it can move higher. During this stage, the mood in the market can quickly shift from euphoria to fear. This is when the weak hands are shaken out. Those who were only in for the quick gains may start to panic and sell their holdings. But the savvy investors, those who understand the cyclical nature of markets, they see this as an opportunity to buy more Bitcoin at a discounted price. It's also important to note that the pre-halving retrace doesn't mean that the overall upward trend is over. It's just a temporary setback. It's like taking 2 steps forward and 1 step back. You're still moving forward, just not as quickly. The duration and depth of the retrace can vary greatly and are influenced by a multitude of factors. These can include the overall state of the global economy, regulatory news, and investor sentiment, among others. So there you have it, the pre-halving retrace in a nutshell. It's a time of correction and consolidation, a time of fear and opportunity. But remember, it's just part of the journey, part of the fascinating cycle that is Bitcoin halving. With the retrace behind us, we then confront the post-halving resistance. Following the halving, we encounter the post-halving resistance. This stage, my friends, is like a game of tug-of-war, a battle between the bulls and the bears. Here, the price of Bitcoin can either stagnate or experience a slow drop. But why does this happen? It's simple. The halving reduces the supply of new Bitcoins entering the market. Now, this should ideally cause a surge in prices due to the basic economic principle of supply and demand. Less supply with the same demand equals higher prices, right? However, the reality is often more complex. During the post-halving resistance stage, many investors who bought before the halving, anticipating a price increase, start to sell off their holdings. They're taking their profits. This selling pressure can offset the reduced supply of new Bitcoins and cause prices to stagnate or even slowly drop. It's a period of uncertainty where the market is trying to find its footing, trying to determine the true value of Bitcoin in this new halved reality. Some might even call it a clash of expectations and reality. But here's the thing. This resistance isn't necessarily a bad thing. It's like a pressure cooker letting off steam. This stage allows the market to adjust to the new supply dynamics, and it also gives late entrants a chance to get on the Bitcoin bandwagon before the next rally begins. So if you're an investor, don't let this stage scare you. It's just a part of the Bitcoin halving cycle, a necessary pause before the next leap. Remember, Bitcoin has undergone this cycle multiple times before, and each time it has emerged stronger. And for those who are wondering if this resistance stage is a sign of a Bitcoin bubble bursting, let me assure you it's not. It's a natural part of the market cycle, a breather, if you will, before the next big run. Finally, we reach the most exciting stage, the post-halving parabola. The final stage is the post-halving parabola. Now, the post-halving parabola is the time when we could witness a significant price increase. Let's dive in to understand why. You see, after the halving event, there's a reduction in the amount of new Bitcoin entering the market. This scarcity, combined with a steady or increasing demand, can lead to a price surge. But why do we call it a parabola? Well, if you graph the price of Bitcoin over time, you'll often see it form what looks like a curve. This curve, or parabola, tends to steepen after a Bitcoin halving. Think of it as a skateboard ramp, where the skater is Bitcoin's price, and the steep incline is the post-halving period. The skater, or price, can pick up some serious speed as it shoots up the ramp. In the past, this parabolic stage has resulted in some of the most dramatic price increases in Bitcoin's history. For example, the 2017 post-halving parabola saw Bitcoin's price skyrocket from around $1,000 to nearly $20,000 within a year. That's a 20-fold increase. But hold your horses, it's not always rainbows and unicorns. This stage can also be volatile. The price can swing wildly, and while it can go up, it can also come crashing down. It's important to remember that past performance is not a guarantee of future results. So what's the takeaway? Well, the post-halving parabola can be a thrilling ride for Bitcoin enthusiasts. It's a time of potential profit, but also potential risk. It's a time when the laws of supply and demand can push Bitcoin's price to new heights, but it's also a time when the market can be unpredictable. With the stages of halving covered, let's consider the potential impact of large institutions on the market. What happens when large institutions like BlackRock enter the Bitcoin market? This is a question that has been on the minds of many in the cryptocurrency space. Large institutions have the potential to significantly influence the price of Bitcoin. Their entry into the market can bring a substantial amount of capital, which can cause the price to surge. On the other hand, if these institutions decide to sell their holdings, it could lead to a sharp drop in Bitcoin's price. But it's not just about the capital they bring. Large institutions also bring legitimacy. They signal to the world that Bitcoin is not just a speculative asset, but a legitimate investment. This can attract more investors, further driving up the price. Yet there's another side to this coin. The entry of large institutions also raises concerns about market manipulation. With their vast resources, these institutions have the power to influence the market in ways that smaller investors cannot. For instance, they could potentially manipulate the price by buying large amounts of Bitcoin, driving up the price, and then selling it off, causing the price to drop. This is a concern that is not unfounded, as we've seen instances of market manipulation in other financial markets. But it's important to remember that market manipulation is illegal, and there are regulatory bodies that monitor for such activities. In the crypto world, the decentralized nature of blockchain technology also makes it harder for any single entity to control the market. Moreover, the fact that large institutions are interested in Bitcoin is a testament to its potential. It shows that Bitcoin is not just a fad, but a revolutionary technology that is being taken seriously by some of the world's biggest financial players. So, while the entry of large institutions into the Bitcoin market brings both opportunities and risks, it's an important development that cannot be ignored. It's a sign that the crypto world is maturing and that Bitcoin is becoming a part of the mainstream financial system. Understanding the dynamics of Bitcoin halving and the role of large institutions can help us navigate the crypto world with greater confidence. Let's recap what we've learned today. We've journeyed through the 5 stages of a Bitcoin halving, starting with the pre-halving period, where miners ramp up their efforts to mine Bitcoin. Next, we delved into the pre-halving rally, a time of market optimism and increased buying activity. We then touched on the pre-halving retrace, a slight downturn before the main event. After the halving, we discussed the post-halving resistance, a period of initial market hesitance, and finally the post-halving parabola, a potential surge in Bitcoin's value. We also considered the role of large institutions like BlackRock and their possible influence on Bitcoin's price. As these financial giants enter the crypto market, they could significantly sway the price dynamics of Bitcoin. In essence, Bitcoin halving is a complex event with many influencing factors. Keep these points in mind as we approach the 2024 Bitcoin halving. Stay informed, stay vigilant, and happy investing. Thank you for tuning in to our comprehensive guide on Bitcoin halving. We hope this deep dive into the world of cryptocurrency has helped you understand the potential impact of this significant event on the global financial landscape. If you found this video informative and helpful, do give it a thumbs up. It helps us know that we're on the right track with our content. And if you haven't subscribed yet, click that subscribe button now. Our channel is dedicated to providing you with up-to-date, reliable information on Bitcoin and other cryptocurrencies. We aim to help you navigate the ever-changing crypto market with confidence and ease. In the world of cryptocurrencies, knowledge is power. Stay informed, stay vigilant, and you'll be well equipped to make sound investment decisions. Until next time, happy investing and see you in our next video.